Hey, how's it going, everybody? Anmol here. Welcome to another edition of the Swing Trade newsletter. Hope you guys are doing well, and let's get started. What a week! What an interesting week overall in the markets. As you can see here, markets had an extreme sell-off here. We had like red, completely selling off, and then we got like 4 or 5 red candles in a row, which naturally means exhaustion. And then we puked down this morning, came all the way down to 420 area, found support, and there was some support. You look to the left, right? There was some support, clear level of support where we bounced from. Let me draw a line there. Now you can see how perfectly, right, these lines align. You can see that over here. This used to be pivot resistance, became pivot support, came right down to that support level, and then from there, the markets bounced back higher. So markets had a pretty good move, and but was starting to still look weak though. Even after that bounce, notice the next few days there was a hesitation to go up, but there was also an hesitation to go down. So people weren't uncertain. We got this back and forth action. This day green, next day gap up, and then sell off. The next day gap up again, and then sell off again. The next day slight gap up, and then we went down initially. Then we came right back up again. So the Jerome Powell gave his little speech, talked about everything, pretty much said everything he was saying earlier, so there was literally no surprises. Although from what I heard, and again, I don't try to read up too much into what people are saying. I find fundamental analysts extremely hilarious and extremely funny because they're like, Jerome Powell said this or that, markets went down. And I'm like, but you could have just seen that on the chart, and you could see that's happening already. And then they're like, markets bounced, Jerome Powell instilled confidence. And I'm like, but we got, a bunch of red candles in a row puking out into a support. That's exactly what happens. So it's kind of funny when I read into these financial people, because technicals always lead the markets. And technicals already told you right on this day, that this channel that we've been in is breaking. These support levels are breaking, moving averages. So right over here, we knew that we were going to sell off, right? That's why we had MU short, NVIDIA short, right? GPS short. We already saw that coming, right? And then the market sold off, and they bounced. Now, here's what's interesting, right? Now, I would have expected a little consolidation and go down, and, that might still happen. That could easily still happen. But what's interesting here is how the sentiment changes really quickly. So as you guys know, I'm a contrarian, so I like to go where the other people are, saying it's not gonna go. So right over here, everybody was super bullish, so I got bearish, right? And boom, market sold off. And then right on this sell-off day, everybody else started to get bearish too. Then I was like, okay, that's probably not gonna go lower. Now everybody's bearish, so it's not gonna go lower. Let's get out of MU, GPS, and NVIDIA, take our profits, because we're probably gonna bounce. And then we bounce back up. Right now, here's what's interesting. As soon as we got this bottoming tail green candle on this day, people were like, "That's it. The market has bottomed, and this was it. This was the sell-off. This was the bottom." And then on this day, on Friday, when market closed green, everybody else was like, "Okay, let's start making a list of stocks we're going to dip buy or stocks we're going to buy," and everybody suddenly became bullish again, which makes me wonder. Now, this could be the low. We got a pretty nice high volume candle on this day, so yeah, maybe we could go right back up again. But the fact remains, technically, the trend still remains broken, right? So as a technical traders, the goal is to try not to think. The goal is to trade what you see, not what you think. So in this case, yes, we could easily bounce back higher, but the markets are still guilty, right? They're guilty. They're not innocent right now. They're still in a downtrend, right? Because here, the uptrend was broken, right? So now we got a series of lower high, right? Lower low. Lower high, we got a lower low. So until we get a higher high and higher low, we are still in a downtrend. So any bounce, even up until here, any bounce could easily, markets could go back up here, still create a lower high, right? So until the trend is broken, the trend is valid. Right now we're in a downtrend. The market still has to convince me if it's going to get back in an uptrend. And how does it convince you? Well, number one, by making a higher high and a higher low. And number two, getting back above its 9 and 21 EMA, right? Which is the red line and the blue line. So until we get back above that, in my books, the markets are still in a downtrend. So I'll show you something here. The way I personally swing trade, and I'll show you how I swing trade. And Again, if you have taken the PTS course, you guys already learned that in there. If you have not taken the PTS course, let me give you a little gift here. So notice this. This is in PTS course. This is the basic chart, basic unit of the market, right? This is how the markets work. This is how all of our trading technical thesis is based upon, right? We go up. This is called a stage 2 uptrend, right? And then we get a distribution phase, stage 3. So you can see here, stage 1 was accumulation, where everybody's just accumulating. We're going sideways. Then we break out. We get stage 2, where there's demand and then there's greed, right? Everybody wants to buy everything. Now, in your goal as a trader in stage 2 is to buy every little dip and every little breakout, right? Then we get into stage 3, right? And then we get into a stage 4, which is supply and fear, right? And so again, in chart form, this is what it's going to look like. In stage 1, moving averages are flat. We get a breakout. We go into stage 2, right? You go in there, then you get a stage 3, then you get a stage 4 downtrend. So now, in stage 4 downtrend, your goal as a trader is to short all rallies and breakdowns, right? So now here's interesting. Where I think we might be. I think we might be here. I think we're just get out of stage 3. Maybe we're in stage 4. We're not into stage 4 yet, because stage 4 really happens when, well, you've broken down under this area. So now I think we are here. I could be wrong, right? But that's my thesis, is that we are here. Now, what do I mean by that? So now notice this. We had that sell-off, right? We had the sell-off in the S&P. Notice this. In stage 3 to stage 4, we have that sell-off, right? Now notice this. We're going sideways, right? Red, green, red, green, red, green. We're going sideways. Notice this chart here. Right, stage 4 beginning. So entering from stage into stage 4, we go down, we went down, then we consolidate. So we might be consolidating like this for eventually going lower. That could be the case, maybe not. That could be the case. Usually this is how the markets, where everything works like this, right? And I'll prove it to you. Let's take a look at Bitcoin. Okay, let's take a look at chart of Bitcoin. Notice this: sideways stage 1, uptrend stage 2, sideways stage 3, stage 4. Want me to show you again? Let's go back in time. Last time when Bitcoin made its move to 60,000. Stage 2 uptrend, sideways stage 3, enter stage 4. Then we have stage 1, stage 2, stage 3, stage 4. Okay, let me show you again when the Bitcoin made 20,000. Everybody was like, Anmol, how did you make that short call on Bitcoin at 20,000? You're crazy. I'll show you how. Look at this here. Sideways, stage 1. Breakout, stage 2. Stage 3, stage 4, okay? And I did it again. If you go back in time, yeah, 20,000, right? 20,000 here. Even happened back in here, yeah, right before this dropped to 3,000. So if you take a look at this chart right over here, notice this: Bitcoin, stage 1, and stage 3. When it touches 20,000, stage 4. Want me to show you in Cathie Wood's ARK? Let me show it to you in Cathie Wood's ARK. Here's ARK Innovation ETF. Stage 1, breakout. Stage 2, stage 3, supply, right? Sell off, consolidate, sell off. Stage 4. See that? So everything works like this. That's why I'm like, fundamental analysis makes no sense to look at, because technicals will ever tell you everything you need to know. So right now, we could be in two scenarios. We could be maybe entering a phase where we slightly go up, slightly go down, just kind of chop around. Maybe we chop around till March, next time when Jerome Powell is going to speak, and maybe he raises rates or whatever, right? Maybe they wait until then and we get that sell-off. And it makes sense too. It makes sense, right? I mean, look at March. March is right over here. It makes sense. We might go up a little bit, go down a little bit, kind of hang in there, and then maybe sell off there. So that makes sense. What also makes sense to me, all right, is, again, guys, by the way, I'm just, you know, a lot of people just say, hey, man, when you're making these newsletters, just give me the trades. We're good to go. Don't make this a long newsletter. But I know there's a lot of people who want to learn. So, you know, bear with us. If you are somebody who just wants to take the trade, you have no desire on learning, feel free to just take the trades from the text newsletter. You don't need to watch the video. The video is for me to let you know what I'm thinking, and maybe you can learn along the way. So this makes sense too. Maybe this is a left shoulder. Maybe this is a head. Right? Maybe we go up a little bit, right shoulder. Come in there. That aligns with our thesis of that market cycles. So I think we're gonna sell off in March. Again, I hate giving timelines and predictions, but maybe that's what's happening. Right? March, Jerome Powell's supposed to speak. that lines up with our head and shoulders thesis. That lines up with our stage 4 chart that I showed you. So that makes sense. And if you remember Nikkei, right? The Nikkei chart that I showed you in the last newsletters, chart of the Nikkei from 1990s, comparing that with the Dow Jones today. Nikkei, I think, was around March when it started to sell off too. So, hey, something to keep in mind, right? Something to keep in mind. But again, so what I'm saying is, yes, this could be the bottom. Could be, right? We can go right back up again like nothing ever happened. But for now, until the market is below the moving averages, my bias will remain, bearish. But that doesn't mean I'm not going to go long. I could still go long individual stocks. Stocks that might be in their stage 1 or stage 2, right? But as far as the market's concerned, my bias is still going to be short, and I would refrain from buying any dips. But again, that's me. There's a lot of long-term investors. They're like, hey, let's just buy every little dip. And again, if you want to do it like that, that's fine. I mean, I'm pretty sure, like if you look at next 10 years, yeah, if you buy every dip and buy and hold, let's say the market crashes, doesn't matter, because for pretty much 100% surety that in next 10 years it'll come right back up again. So you're fine doing that. But you might have to sit through a year or two of dead money, which I don't want. So I like to trade. So that being said, that's my analysis. Now, let's take a look at our results so far. So for the newsletter. So again, markets are down for the year, right? Look at 1st January. So if you invested the money in the S&P or the Dow Jones or the QQQ, you're down like 10% or so putting your money in the market. The newsletter is up, right? We started the year off pretty badly, some losses, but then boom, 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 bunch of winners, especially the MU. Thank you, MU, right? Almost 5 Rs there, pretty good gain. And now we're back, right? Even if you're risking 1% R unit, that's 6%, right? Market's down about 10. If you're risking 2% R unit, you made 12%. Market's down 10. So we're doing a good job there. Overall, nice start to the year. And I have some new trades for us this newsletter. Let's just dive into them, right? Let's not chit-chat too much. Let's dive right in. So I got 4 new trades for this newsletter. 3 of them are long. One of them is a short. And the short has 2 different criteria. So I will explain. So it's important you watch this video. Otherwise, you might not understand. But let's go to the long first. First long I have is IBM, International Business Systems, okay? IBM. So the reason I got IBM here, let me go over here. So you see here on the daily chart, let me go ahead and delete these things right here. You look at the daily chart, had a pretty beautiful, while the whole market's having a bear market, IBM on this day, after earnings, puts in the biggest green bar it's seen in a long time, right? Then an inside bar, and then in a candle that tried to go down. Now we got something that looks like a buy setup happening inside of this green candle. So I like that. On the hourly chart, you are seeing the trend change, as you can see. Little maybe hourly flag, little hourly buy setup. So that's pretty good. What's even more interesting on IBM is the weekly chart. So hold on, let me go ahead and delete that. Sorry, the monthly chart. All right, let's go to the monthly chart of IBM. So yeah, there you go. So you can see that over here on the monthly IBM, it's also in a massive consolidation pattern, right? Going sideways. So now I think if the daily buy setup actually triggers, and if it can get back above this green candle, then it takes this out, this monthly resistance, and then it might actually break out. So that's something it's worth pursuing, especially because the whole market is so weak that this one's stronger than the market. So I like that idea. So we're gonna go long on IBM. Numbers are in the newsletter, right? So check those numbers out for that. And let's dive into the next trade. Next trade is DWAC, DWAC, right? Donald Trump's Truth Social app. We had a decent trade on this while over here. Yeah, right over here. I think we had this in the newsletter. We had a great trade, although could have been way better. I think I got out pretty early. I think I got out in the 70s, right? I got in around here on $50, $60 area. I got out in the 70s, and I freaking went to 90. So bad exit, but it's setting up again. Again, DWAC is a very choppy trader, so be careful. But what I like is this was the breakout area where it broke out from, where we traded that breakout, and it broke out. And then it pulled back to the breakout area, which was once resistance, now trying to become support. So I think if it gets back above this 9 EMA and gets back above these candles here, something like this, like a daily buy setup, it might actually go and take out 100. Again, that's my thinking. Now, another catalyst, I guess, is on 21st February, a month from now, Donald Trump is launching his app, right? The Truth Social. So I think as we get closer to the launch, maybe this thing gets another pop. Maybe tries to make one more pop over 100. So I think it's worth keeping an eye on. Okay, we're gonna do DWAC. All right, next long, MEOH. That was funny. MEOH, MEOH, Methanex Corporation. Okay, so what's interesting about this one is it was in a downtrend. It broke that downtrend. Now it has a series of higher highs and higher lows. Had a nice move a few days ago. Went into this resistance area, as you can see right there, resistance, and it pulled back from that resistance. Now it's coming back up, and now we have sort of like a 3-bar play happening over here. So I think if the 3-bar play triggers, it might take out this resistance anyway. And if it takes that out, then it's probably going to go test this resistance over here. So that's the thinking there on MEOH. All right, so those are the 3 longs. Now, to our only short for this newsletter, pay attention to. Pay attention. Because this trade has 2 criteria. The trade is shorting Dow Jones, DIA, diamonds, right? Dow Jones, looking to short this on a little bounce. But there's 2 criteria, meaning I'm looking to short it at 351. So right now it's at 347. So we're going to put a sell limit order at 351, which is right under the 21 EMA. So if it comes back up like this, we're going to get in. We're going to put our stop loss to 359 something, which is like right over here somewhere, right? Giving it some wiggle room. And then I'm hoping that it does something like this. Okay. So that's the short. Now, since we're taking 3 longs, having a short is a good idea in case the market dies. All right, now here's the thing. But it's possible on Monday Dow Jones doesn't come up. It's possible we come down. Why do I think we could come down? Because if you're seeing the chart of Bitcoin, I mean, it moved up too, so markets probably will as well. But Bitcoin suddenly started to have a little red here on the daily chart, and Bitcoin's also in a downtrend, right? As you can see there. So you know, it's possible maybe the markets come up or don't come up to our entry and start just going down, because if Bitcoin starts going down, market usually goes down a bit later. It's a weird correlation, but what I've noticed is that when Bitcoin drops, like you'll notice like 15 to 20 minutes later, the markets also start dropping. And if Bitcoin bounces, a few minutes later, the stock market start bouncing. It's weird. But anyway, so it's possible maybe by Monday, Bitcoin is already coming down here. And it's possible maybe the markets go down. I doubt it, but it's possible. So in that case, I don't want to not short the market. What if it doesn't come to 351? What if it just comes to 350 and starts going down? Now what do we do? So I still want to short it. So what I've decided is I'm going to put a sell limit order of 351 with that entry. You will see this in the newsletter. If it bounces, we're going to short on a bounce. But if it doesn't bounce, it starts just going down or it gaps down, then what I'm going to do is I'm going to short it as it goes down. So now, if it goes down, I'm going to look to short at 342.72. 342.72. So if you look at the 1 hour chart, this was the resistance area on the 1 hour where the market rallied into. So I'm going to look to short under this green candle. You see this green candle that happened on Friday? Under that green candle is where I'm going to look to short. So 342.72, and then we're going to use a stop at around 355.30, which is right above this hourly base. Okay, so we're going to look to short it on the way down if that's what the market decides to do. Okay, so those are the 4 trades for the newsletter. Obviously, we don't have any open positions. We exited MU, Nvidia, and stuff for a great profit. So overall, we're doing a good job. So these are the 3 longs, and I got 1 short. And what else do I want to tell you about? Oh yeah, that's it. Yeah, that's it. That's it. There's a couple stocks that I'm watching that I might call during the week, but I'll let you know now. The reason, I might call them, I might not call them at all. Just letting you know. But if I do call them, it'll probably be during market hours. I don't want to call it, when the markets are closed, because these stocks are a little thin. They're a little low volume, and I don't want to send it on the newsletter, because sometimes people mess up their orders and they just buy things at the open, and it's way too thin to do that. I don't think these stocks can handle all of our orders coming in at once. But I'll give you those heads ups. If you want to trade these on your own, feel free to trade them on your own. But I'm not sure if I want to call them for the newsletter because of the low liquidity. But I'll give it to you up front. So if you want to trade it on your own. Okay. One of them is GlassF, GLASF, Glass House Brands. Stocks got killed. Now it looks like it's basing. Like, remember, stage 4 downtrend, stage 1 sideways trend. Now moving averages are curling up a little bit. So I think if this GLASF gets back above $5, it might go to 650. Okay. Next one, GRAMF, GRAMF, TPKO Holdings. So stock is the world's best downtrend ever seen, but maybe now stabilizing a little bit, because you can see if you zoom in, you might be able to see it, what I'm talking about. So if you zoom in and you see here, this was a mini downtrend, got broken. Now it's actually staying above these moving averages. They're starting to curl up. So this one above 140, actually 150. Yeah, 145, 150. Watch this one, a little bit interesting. Again, I'm not in them, right? I'm not trading them right now, and I'm not even sure if I'm going to trade them. But I wanted to give you guys a heads up, so you're not surprised if middle of the day one day I just call them randomly. Then I don't want to hear that there was no time. I'm giving you a heads up. If you like them, feel free to trade them on your own. I'm not sure if I'm going to trade them. I'll make up my mind during the week, but I wanted to give you guys that heads up. Okay, so that's kind of where we are at. With the trades, and we're doing a great job. And again, if you guys are in the options alerts, we're doing a great job in the options alerts too. So I would again love to have you guys there if you want to join. If you want a trial, I don't know if you do I don't think we do trials for options alerts. I don't think there's any trials, but if you want to join, I mean, email Laura. If there is a trial, she can give you one. If not, just join in. It's only $97 a month, and I'm confident that returns are going to be good. I mean, this is the spreadsheet for the options alerts. We're doing a good job. And I tell you the exact contracts I'm buying, so you can decide on your own. I tell you the exact number of contracts I am buying and selling. And then we also have it, hey, if you just traded 10 contracts on each of the trades, this is what you would have made. The results are right over here, all in there. Again, if you want interested, email Laura. And that is about it. So hope you guys have a great weekend, and let's get ready for another week. I'm excited. I mean, these markets are getting interesting because I love volatility. Even though volatility might be tougher for a lot of people to trade, I enjoy it because it just keeps the mind sharp, right? So I like it. But again, markets are still guilty in my opinion, and even the S&P could be a good short. S&P could be a good short too. Markets. You see this here. This used to be resistance, then it became support, then it became support. So on the way back up, this 450 area on spiders could still become resistance. That's where we could get a lower high, and that makes sense. Why does that make sense, Anmol? Well, that makes sense, doesn't it? The downtrends line sync up perfectly to these downtrending moving averages, to the 450 whole number, and to this. So it kind of lines up, right? Kind of lines up. Makes sense, but again, we'll see. What else? Oh yeah, why do I want to short Dow Jones and not like S&P or QQQ? Great question, everybody. Well, nobody asked me that, but I'll give you the response anyway. And I'll tell you why. Because Qs are good too. Qs look weak as well. Qs are actually the weakest market. But tech has sold off quite a lot. I mean, a lot of tech stocks have sold off quite a lot. Overall, they might want to bounce. Also, Qs are down more than 10%. So I would need a substantial bounce on these ones to short. And why don't I short the spiders? Well, because spiders are now trying to get above the 200 MA as well. And then the other reason is spiders, S&P has a lot of energy stocks, right? Oil stocks, energy stocks. Energy sector actually looks strong. Look at energy sector making new highs. Look at oil making new highs, USO. So if energy is so strong and spiders has a lot of energy stocks, then I don't really want to short energy stocks. I don't mind shorting Dow. Why do I don't mind shorting Dow? Well, because Dow, I think, has yet to play catch up. Yeah? Dow has yet to play catch up. Dow sold off. Yeah, sold off to a pretty major support area. That's a major support area. Look at this. Support. Draw a line. Boom. Every time it finds support here, right? You can see that. So but the Dow isn't down as much as the spiders or the QQQ, which again, I think they might play catch up. They might have more room to go down. And the reason we have the support area is actually better, because what happens if the Dow snaps the support area one day? I mean, you're going to see it move down to 300 maybe, right? Possible. So I think the break of support is actually a catalyst for more sellers to come in. So that's why I'm interested in Dow. And also Dow is still below all key moving averages, even the 200. So I like that better to try to short. So that's the reasoning why. So have a great weekend. I will see you guys in the next edition of the newsletter. Have a great